Hello students, I hope you all are doing good and fine. So in our today's video, we will be discussing the ACCA pre-mock, the December pre-mock which has been published by ACCA. This mock is very important and you should do it before you give your exam. Before you see this video also, you have to give this mock and then you have to see this video so that you get to know, okay sir, which question we have done mistake, what is the silly mistake which we have done. Now this section A will be covering in this video. In the next coming videos we will cover section B and the section C area also. So now this is the ACCA pre-mock which has been published by ACCA. It's about FR, not SBR. We are doing the FR mock. So now section A. In section A, as you know, sir, 15 questions will come. 15 questions, each of 2 marks. So 15, as I mentioned in the class, out of 15, you should aim for scoring 10. 10 should be right. 10 should be right. So let us see. All these questions already we have done in our class. I have given the question bank to you. In that question bank, we have seen these questions. Then when I when we had the test series for your IS and IFRS, same questions are repeated. It's not that it's out of the box. Only the numbers are different, etc. So chalo then. Let us start with the section A. As mentioned, the first question is regarding impairment and CGU. So you know impairment question. What did I mention in the class? Impairment, when do we charge? When there will be impairment? When the carrying amount is more, RA is less. So impairment is there. So now this question is regarding a CGU. In CGU, do you remember that we allocate the impairment in a order? First to goodwill. Sir, any specific asset which has been impaired, and then to the other assets on the pro rata basis on their carrying amount. Do we charge impairment for financial assets? Inventory? No, we do not charge impairment for cash, inventory, receivable, because it is already at the RA only. It is already at the recoverable amount. So we will not charge impairment on this. Understand that. So chalo, let us start this question now. A cash generating unit has the following carrying amount in B's book, B's financial statement at 30th June 2007 before allocation of impairment loss. Before the allocation of impairment loss, they have given this value and the year end is what? 30th June 2007. And every time I mention in the class that be good with the dates. See the dates. So we have goodwill, plant, building, intangible, net current assets. So there are these items. So now if you see here, so goodwill is there. So what is the carrying amount here of goodwill? What is the carrying amount of your goodwill? 5,50,000. But let us calculate the net carrying amount. What is the carrying amount? Total carrying amount. Let us first calculate the total carrying amount. So your total carrying amount is 5,50,000 plus 9,50,000, 1.3 million, 4 lakh, 4 lakh 30,000. It is 363. Then the CGU is found to be impaired by 1.3 million. So the impairment loss they have directly given. No need to calculate the carrying amount and compare with the RA as we have done in a lot of questions. There is no need here. Directly the value is given of impairment. We have to allocate it now. We have to allocate it. When we allocate it, so first to goodwill, then specific asset impaired, and the third one is what? Other assets. Other assets on the pro rata basis. Now chalo, on this date the plant had a fair value less cost to sell of 1 million. Okay, they are saying that plant had a fair value less cost to sell of 1 million. So my value of the plant is 0.95 million, but they are saying that the fair value less cost to sell is 1 million. So can I say automatically the RA of plant will be more only? So RA is more, carrying amount is less. Will there be any impairment? Impairment will not be there for plant. If you remember in the class, I had given 3 to 4 types of question that comes. This is a first basic question. Here already the plant has a RA of what? The RA is what? 1 million. So here the RA is more, carrying amount is less, no impairment. So will you charge impairment for plant? No. So impairment should not be charged for plant. So now see here, what is the total impairment loss? Your total impairment loss is how much? 1.13 million. So now, do we charge impairment for net current assets? No, out of the box. Do we charge for plant? No. Now, the first impairment we will charge for goodwill. Let us charge for goodwill, that is 5 lakh 50,000. So how much is this? 5,80,000 is the remaining. Sir, what is the carrying amount of the building following recognition of impairment loss? They are saying what is the carrying amount of the building, not plant, not intangible asset. Is there any specific asset? No specific asset for which impairment should be allocated. There is an asset for which impairment should not be allocated. We have seen. Now this 5,58,000 should be allocated to what? $580,000 should be allocated to building an intangible asset. So how much is the value of building? So 1,300, intangible 400. So this 580,000 I will allocate it to building only. I will not waste my time to calculate for intangible asset. Direct the question same for building, I'll calculate it. So building is 1,300 divided by 1,300 plus 400. If you do this, you get 580 into 1,300 divided by 1,000, excuse me, 700. 1,700 we get the value as. So 580 into 1,300 divided by 1,700. That is 443 point. This is the value. So my carrying amount is what? 1,300 minus 443.5. So 1,300 minus 443.5. I'm getting 856. So 856.5. So the nearest answer is B. So B is the right answer here. So carrying amount minus the impairment loss, we get the new carrying amount. And when we charge depreciation in future years, we charge on this amount. So very easy and a simple question regarding what, regarding CGU. A very simple and a easy question. I hope this is clear to everyone. Chalo then, let us start with the next question. The next question is regarding conceptual framework and recognition. If you remember in our classes, in our class also, we had done that recognition criteria. What does recognition says? That we should recognize any element, that is asset, liability, equity, income or expense, when it provides relevant and faithful representation. Now let us see this. The IASB conceptual framework for financial reporting defines recognition as the process of incorporating within the financial statements an item which meets the definition of an element and satisfies certain criteria. We have seen this. Which of the following elements should not be recognized? They are saying which of the following should not be recognized. You should not record it. When will you not record it? When the definition is not being met, recognition criteria, or the definition of the element, asset, liability, equity, income, expense. Let us see that. As equity, right issue shares. Whenever right right issues are done, whenever shares are issued, right issue is done, can I say we record it or not? Share capital, share premium will increase. We recognize that at equity. Yes, sir. We recognize this as an equity. Then, as an asset, the present value of the cost of decommissioning a plant at the end of the useful life. Yes, whenever there is a decommissioning cost, that also we recognize as an asset. That is what? Debit, asset, credit, provision. This provision, you will unwind it, and this asset, we will depreciate it. We'll do depreciation. Yes, sir, this is recorded as an asset. This is also right. Both the sentences are right. We will recognize. But the question is saying not to be recognized. We will record these two then. As income, goods delivered to a customer for which payment is still pending and the customer is responsible for any damage to the goods. I have delivered the goods to the customer. I have not yet received the payment, and the customer is responsible for any damage. If the customer is responsible for any damage, that means I have transferred the control. Yes, sir, we will recognize this as an income accrual basis. Your IS and IFRS accounting is done on accrual basis. I will record this as an income. This is also correct. So which is the last option that is wrong? For sure your answer is A. As a liability, a provision. Yes, sir, if a provision is there, we recognize the liability. But a provision for operating loss expected in the next 12 months. Do we recognize operating losses? Operating losses are there. Do we recognize a provision for operating losses? No. Remember your IS 37, I have given 7 to 8 cases. In operating losses, we will never recognize what? A provision, because there is no obligation. It is based on future event, not past event. So the right option is what? The right option is A. A is your right answer because we need not recognize it. I hope this is clear. So with this, the first two questions were straightforward, easy, nothing was out of the box. Yes, sir. Then coming to the question number three. Your question number three, let us read this. It's a question of transfer between assets like IAS 40 to IAS 16, IAS 16 to IAS 40. We have done more than 7 to 8 MCQ in the class also. In your test also, you have done 3 to 4 MCQ. Same question. It's not out of the box. Chalo see, Yana. B owns land that was purchased on 1st January. Okay, okay. What did I mention in the class? Whenever we do questions, we have to keep in mind dates also. So 1st January, we have purchased the land. B company has purchased the land for 2 million. If it is a land, do we depreciate? No depreciation. If it is a land, no depreciation. The company initially held the land for capital appreciation. Okay, okay, okay. I have purchased the land. This land is for capital appreciation. If it's for capital appreciation, means which standard? Sir, IAS 40. It's under IAS 40 then. On 1st July 2000 X4. Okay, 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 okay. We have purchased on X2. X2 done, X3, X4. After 2.5 years. After 2.5 years, B company occupied the land and began construction of its new head office. Arre baap re baap. They are saying what? It was a land which we held it for capital appreciation IS 40. After 2.5 years, B occupied the land and began construction of its new head office. Head office will be what, sir? IAS 16. So it's a transfer case or not? Sir, from IAS 40 to IAS 16. IAS 40 to IAS 16. And what are the three important rules I mentioned in the class? First, follow the old standard. Then transfer and then follow the new standard. Whenever you transfer, first follow each and everything or do the fair value of that asset as per the old standard. Let us see now. At that day, the land had a fair value of 2.5 million. So, see here, let me draw the timeline also for you. It is 1st January 2000 X2. Here it is 31st 12 X2 X3 X4. In X4, your 1st July after 2.5 years. Here the fair value is 2.5. Will we charge depreciation here? No, sir. For land, there is no depreciation. Let us read that. So it is IS 40. Yes, sir. It's a land, capital appreciation. Then they are shifting from IS 16 to IS 40. B uses the cost model to measure its owner occupied property. Or, see now, B is using cost model to measure its owner occupied property. So owner occupied property means what? Sir, IAS 16. For IAS 16, we are following this in accordance with IAS 16 plan. And the fair value method, fair value model for investing property. For investment property, we are following fair value model. For investment property, we are following fair value model. So here, if it is fair value model, we will not charge depreciation. IAS 16 fair value revaluation model, we charge depreciation. IAS 40, we will not charge. Here it is a land and we will not charge for land depreciation. If it was land and building, we separate the component and record it. But still here it is at fair value, so no depreciation will come into picture. So sir, here the fair value is what? 2.5. What was the value at which I purchased? 2 million here. So what is the increase here? 0.5 is the increase. Then, how should B account for the change in this? How should B account? They are asking how should B account. Now, you only say me. IAS 40 is at fair value. IAS 16 is at cost model. So, first I will apply the old standard. I'll calculate the fair value. So, the fair value is 2.5. So, what will I say? Debit, credit? So, debit value of the land increasing by 0.5 and PNL 0.5. This will be taken to investing category. It's investing category because it's relating to IS 40. Yes, sir. Then what will I do? Then I will transfer the land. When I transfer the land, what is the journal entry I record? What is the journal entry I will record when I transfer the land? Debit, credit, debit, PP, credit, IP, 2.5, 2.5. So my value will be of PP will be what? 2.5. I have transferred that. This 2.5 we will follow IS 16 now. Let us read. Excuse me. How should B account for the change in use of the land on 1st July? They are saying transfer the land from investment property to PP. Yes, sir. We will transfer from investment property to PP. Recognize a gain of 0.5 million in investing category. Yes, sir. We will do it. Of the P&L. Yes, this is the right option. But let us read the other options. Transfer the land from investment property to PP at its carrying amount. No, wrong. Transfer the land from PP to investment property. Wrong. It's from IP to investing property to IS 16. It's wrong. Continue to measure. No, this is also wrong. Will not measure the asset at the same value. We will change it. So your option A was the right answer here. A lot of times we have seen that the examiner tests this IAS 40 to IAS 16, IAS 16 to IAS 40, IAS 40 to IAS 2, IAS 2 to IAS 40. So once again, have a reading so that you be good with these rules. Chalo then, the third question is also done, a very simple and straightforward question. Question number 4, lease accounting. The question is regarding lease accounting. So lease accounting, we only studied lessees accounting. Let us see now. On 1st January 2000 X4, P entered into a lease agreement. A company is that this company has entered into a lease agreement to lease an item of machine for 4 years. Okay, the lease term is what? So the lease term is 4 years. Rental of 250,000 payable annually. Okay, annually starting on 31st December 2000 X4. So the payments are done in case of arrears. It's not advance. The asset had a useful life of 5 years. Useful life is 5 years. Then what we say? Annual payments is what? 2,50,000 arrears. You need not write down this. Be quick and do not waste time here. I am writing so that it can be a good explanation as well as revision. And at the end of the lease term, legal ownership will be passed to P. Okay, okay, okay. The asset of useful life, and at the end of the lease term, the ownership will be passed to P. Now you only say whenever the asset has been transferred to the lessee, if the asset will be transferred to the lessee, can I say we learned something known as depreciation? Depreciation should be recorded at shorter of useful life or lease term. If the asset is not transferred, if the asset is transferred, we recognize the depreciation based on useful life. Remember, you have to remember that, sir, when we transfer the asset, when the asset has been transferred, when the asset will be transferred to the lessee at the end of the lease term, in that case the lessee will charge the depreciation based on useful life. If it is not transferred, then shorter of useful life or lease term, but here they are mentioned in the question, we have to charge depreciation for 5 years. Yes, sir. The next one, the present value of the lease payment at the inception of the lease was $750,000 or $750,000, and the interest rate implicit is 12.2. Okay, so the present value of the lease payment is $750,000. Then what is the total expense? Whenever I mention the term total is used, depreciation plus finance cost, both the things will come together in the P&L for the year ended. So it's a full year, it's not a mid year, it's a full year. Excuse me. So the present value is this better. You only say 7,50,000 into your amortization table, into the rate, interest rate, implicit rate, that is at 12 percentage, 91,500. Will I do this? I will not do. I'll not waste my time reducing and calculating the closing balance. The question is not asking you to calculate the current and non-current. It's simple interest. I have taken this. Yes, sir. So depreciation 7,50,000 is the value. That is no initial cost, etc. And this divided by 5 years, not 4 years, 5 years, because the asset is transferred here. 1,50,000 plus this one. Your total is 2,41,500 as your expense in P&L. So two, yeah, B is the option. B is the right answer. A very easy, simple 2 mark question. The fourth question regarding your leases. So remember, read the question carefully, whether total expense is written, whether depreciation is written, whether what will go to operating category. If it was mentioned operating category, then this 1,50,000 will go. If it was mentioned what will go to financing, 91,500. Chalo, this was also a easy question, question number 4. Then starting with your next question. IFRS 9, fair value to OCI. It's an investment in shares. Whenever it's a financial asset, and the financial asset, we have two categories: debt, equity. Debt has three methods. Your asset has how many methods? Your financial asset, equity one, has two methods: Fair value through OCI, fair value through P&L. A simple question. Okay. Now, chalo, let us read the question. R purchased 10,000 shares on 1st September 2000 X4. They purchased how many shares? The company is purchasing 10,000 shares on 1st September 2000 X4, making the election to measure them at fair value through OCA in accordance with IFRS 9. The shares cost is 7.65. Okay. On 1st September 2000 X4, when we purchased, the cost was how much better? 7.65. So it will be how much? 10,000 into 7.65. It is 76,500. Simple. Transaction cost associated with the purchases were 1,500. Now say me, what is the journal entry? Let me pass the journal entry also. Equity shares, cash going out of 76,500. Yes, sir. Now, your transaction cost is there of 1,500. Whenever transaction cost is there, in case of OCI, we capitalize it. For fair value through P&L, it will go to P&L, but for fair value through OCI, we capitalize it. See now, when you capitalize, what is the entry? Cash is going out, 1,500. This equity share becomes 1,500. So now, what is my value of the shares? So 1,500 I've added. The total value which I record is 78,000. Then at 31st December, the share had a fair value of 8.5. 8.5 was the value at 31st December. So the share price is 10,000 into 8.50, that is 85,000. So what is the gain here, everyone? The gain is 7,000. 7,000 gain in OCI. This will not be reclassified to P&L. So what should be recognized in OCI in relation to these shares? 7,000. We have just done this question. We have done this question in a test also. You had two questions regarding fair value through OCI 1 and fair value to P&L. Same question, only the numbers are different. Yes, sir. A very easy, simple question. So out of 15, till now, 5 questions were easy. Chalo then. Let us move to the next question. Current cost accounting criticism. Now, when coming to this current cost, in your conceptual framework, we have seen two methods, two measurement bases. One is historic cost, one is current cost. Under current cost, we have fair value, value in use, replacement cost. And I mentioned that the advantages and disadvantages are very important of current cost. In the class, 5 to 6 days before only, we have revised this one. What we say? Our conceptual framework. Chalo then. Which two of the following criticism applied to the current cost? They are saying which of the following criticism, disadvantages. It's like it creates a problem for us during a period of inflation. Okay, it's an inflation period where the inflation is there, and current cost. So current cost, I'll say fair value. So we follow fair value. Okay. It requires frequent revaluation of asset, which can be subjective and complex. Yes or no? When we did IAS 16 also, we have learned that, sir, should we revalue the asset every year? I mentioned that. If the value of the asset is frequently changing, then we have to revalue the asset every year. If the fair value of the asset is not frequently changing, then no such problem. Then 3 to 5 years we will revalue the asset. But here, if the inflation is there, the price of the asset will go up. So we have to do frequent revaluation. If we do, excuse me, if we do frequent revaluation, can I say our depreciation calculation will be more? Yes, it is subjective or not. Yes, sir. The calculation of fair value, we have to hire a professional who will calculate the fair value. So this sentence is true. It is a criticism. It's a problem. Yes, sir. Then it may reduce comparability between companies using different valuation method. Yes, it is true. Yes or no? Whenever current cost, one company is following historic cost, one company is following current cost. Will you be able to compare the financial statement? We can't. So it is a problem. It is a criticism that if one company is following cost model, one is following historic cost and current cost, we can't value. It is also criticism. Yes, sir. Then these two are the answers, A and B. Let us read the other two sentences. It is less useful for decision making than historic cost. No, 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 no. It's wrong, sir. It's wrong, no? The statement is only wrong. It's a wrong statement. Why? Because if we use current cost, it will provide a It will provide useful information because it is providing relevant information as per the market. Then let us read the D part. See, it reflects price of asset prevailing at the time of consumption of the asset. Yes, sir. This is true, no? It's an advantage. It's true. It's not a criticism. It's a good sentence. That today, if I do the fair value of the asset, can I say the depreciation expense which I record will be based on the inflation, and the revenue which I have is also in today's term. The depreciation is also in today's term. So it is reflecting the consumption of the asset in real time. It's good. It's not a criticism. So answer is A and B. I hope you have understood this. See, many students, this is out of the box, huh? You can easily eliminate this one. The confusion will be what? In these 2 points. But the most appropriate answer in the exam will be this only, because you can easily read theory questions properly. As I mentioned, use elimination technique, eliminate the sentences first. Thus, out of A, B, C, you have to decide what is the criticism. These two are the criticism. I hope this is clear to everyone. The sixth question. Now, chalo, let us start with the seventh question. Question number 7. The question number 7 is regarding revenue recognition. Sir, when should we recognize revenue? When control is transferred. Simple. Let us read here. The question is regarding which topic in revenue? Excuse me. On 1st April 2007, C delivered a machine to a customer. Okay. Assume that you are a seller, I am your customer. You are selling the machine to me. Okay, you are selling the machine to me. I am your customer. You are selling the machine to me. The machine was priced at $260,000. $260,000. The machine was priced at $260,000. This is the SSP, the selling price, standalone selling price. The customer had a right to return the machine for a full refund at any time up to and including thir- 30th June 2007. The question is saying what? If I am the customer, I have the right to return you the product. Now you only say we have learned sale with right to return. What does sale with right to return says? Sale with right to return says that we have done a question regarding Amazon, Flipkart also in the class, and I mentioned what one important point to you. What was the important point? The important point in the class I mentioned is that sale with right to return works on the concept of sale with right to return. In that case, we should recognize the revenue to what amount? That the goods will not be returned. If the company is saying that the goods will be returned, if the company is saying that goods will be returned, will the company recognize revenue? No, the company will recognize refund liability. The company will recognize refund liability. So, if the customer has a right to return the machine for a full refund, they can return at any time. Now we have to estimate, we have to make a judgment whether the customer will return us or not. If the customer will return us, we will not include revenue, directly refund liability. And in your step number 3, if you remember fixed payment, variable payment should be included to the extent that future reversal are not possible. It is highly probable that future reversal should not be there. Now let us see that. Excuse me. This is a new customer. Arre baap re baap. If he is a new customer, will you be able to make the judgment today? It will be very difficult. And at 1st April 2007, C was unsure whether they are likely to return the machine on or before 30th June. They are unsure whether they will return or not. So in that case, what should we do? In that case, as a company, what should we do? Can we recognize revenue? No revenue. Why? Because in, if you remember, sale with right to return, the sale will only be recorded for the goods which will be with the customer if they have the right to return. And if we know that, if we know that the customer will return, we will not recognize revenue. And it is difficult for us to identify, sir, it is very difficult to judge whether the customer will return or not. In that case also, we will not recognize revenue. So here what should the company do? If no revenue, we can't recognize the revenue, but the amount we have received, the amount we have not yet received, we have delivered it, but you have not received the amount. Chalo then, Which of the following is the correct accounting treatment at 1st April 2007? I know this question is little bit this, but in our class we have done sale with right to return. We have done this fixed payment, variable payment. In variable payment, we have done 2 to 3 questions also, basic question. In that also, it was mentioned that a new customer is there. If you remember, it was a question regarding a software company. We say it's a new customer. If it's a new customer today, will we recognize revenue? No. If it was a customer, if the customer we have this customer was from 2 or 3 years, past 3 years, and we know, in that case it becomes easy for us to judge, but here it is very difficult, so we will not recognize revenue. So let us see now. Debit receivable revenue, no. Revenue we too will not recognize only. Debit refund and this one, no, 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 we will not recognize revenue. So first two options are the wrong only. Then next one, no accounting entry, this is also wrong. We have to pass an accounting entry, no, because we have to, on one side we say we have a receivable of 2,60,000, and on the other side we have what, a refund liability. We have a refund liability of $260,000. Here we will not recognize a revenue, we will recognize receivable, but we will not recognize revenue, we will recognize refund liability, because it is difficult for us to judge. It is difficult for us to judge whether the goods, and it is unsure. And see, as a company, as I'm selling, I'm unsure what should I do. So the answer is here, C is the right option. This was a little bit dicey question where students would have done mistake. It's okay, no issues. Out of 6 7 questions till now, one question you have done mistake, no issues, no issues, it's okay. Chalo then, let us start with the next question. I hope it's clear to everyone. Please revise the concepts so it will be easy for you. Yes. Chalo then, eighth question now. The eighth question is regarding what, sir? Foreign exchange and PP. Sir, foreign exchange, IS 21. What did we do in class? Sir, IS 21, two things, monetary, non monetary. Sir, monetary item we will restate at each reporting date. Sir, non monetary like inventory, PP, intangible asset, we will not retranslate at each year end. We will not change the value. We will not restate the values. But sir, if it is at revaluation model, we will do it. We will do it. Same questions we have done in the class. Same thing. So see here now. On 30th November 2000X3, we purchased land in another country. Okay, a company V is that this purchase the land in another country. If they are purchasing in another country, that means it will be what? Other than functional currency, it will be a foreign currency for them. That is 45 million year. The land was classified as PP. Okay, it is a PP. So if it is a PP, then means it will be what? If it is a PP, in that case, it will be what? It will be a non-monetary item, sir. PP. Measuring using cost model. Arre baap re baap. In cost model, what did I mention in class? In cost model, remember the rules. So cost model, on the first day we change the value, we convert it and record it as an asset, and then we normally depreciate it. At each reporting date, we will not remeasure it. If it is at cost model, we simply do what? We simply retranslate or convert this PP today and recognize this as an asset and depreciate over the useful life. Simple. Then at V company's year end of 31st December. Okay, after 1 month, it's a year end. It has paid. It has paid. It has paid how many euros? It has paid 36 million euros. Out of 45, it has paid 36. So that remaining will become what? Sir, out of 45, they are paying 36. The remaining is 9. So this 9 euros will become payable. Sir, on one side there is a payable, on other side there is an asset. So this payable is what? A monetary item. For this, we have to restate it, retranslate the value. Yes. Then still 9 million has to be settled with the seller. Exchange rate, $1 is equal to how many euros? $1 is equal to 3 euros. I mentioned what is the quotation? $1 is equal to 3 euros on the first day when we acquired the company. As at 31st December 2000X3, it is 2. $1 is equal to 2 euros. Average rate is 2.5. Question: what is the carrying amount of the land and the payable at 31st December? Sir, do we depreciate land? No, sir. The value will be same. Today, whatever is the value will remain same. We will not depreciate. A easy point. See, a easy question here. Sir, the value was 45 million. So $1 is equal to how many euros, sir? 3 euros. It is what? 45 million euros. So how much will be the value of my asset? I will cross multiply and I will get what? My value as 15 here. 15 is my value of the land today. Will I depreciate this land? No depreciation. So the carrying amount of the land is what, sir? 15 million. It's not under revaluation model. The value will remain same. Sir, 9 million is the payable. What is the closing value of the payable? Sir, 9 million. $1 is equal to how many euros at the closing date? 2 euros, sir. So 9 euros, what will be the value? 9 divided by 2, it is 4.5. So my value of the payable is 4.5. I need not calculate the gain or loss on settlement, Baba. We need not calculate that. We only have to calculate the closing value, the carrying amount. That is 5.5, 4.5. Let us see. The carrying amount of this is 15, yes, and payable, yes. A is the option. Then others are wrong. All the other options are wrong. So option A is the right answer here. As I'm doing the questions, I'm revising the rules also. What is written in the standards. So it will help you to recall. So this also question was easy. So eighth question also was straightforward, easy. And a lot of times in the class also I mentioned you that whenever we purchase a asset and we are not paying today, it becomes a payable. That payable will be what? Monetary item. We have to retranslate it. Yes, sir. Chalo then ye ho gaya. Now coming to the next question. IFRS 5 non-current asset held for sale. A very easy question. A easy topic. Let us read the question and understand whether it's easy or not. So now everyone, IFRS 5. IFRS 5 non-current asset held for sale means what? So we are shifting from current asset to non-current asset held for sale. Now, whenever we shift from non-current asset to non-current asset held for sale, we should recognize the asset at lower of carrying amount or fair value less cost to sell, and the difference will go to P&L. And that once an asset is classified as held for sale, no depreciation. Sir, if there is any revaluation, can we utilize that revaluation? No. Each and every amount. If there is an impairment loss as per IFRS 5, it will go to P&L straightforward. Yes. Now, what are the two conditions here? If you remember, what are the two conditions in the class? An asset is held for sale when the asset is available for immediate sale. The asset must be available for immediate sale. The sale must be highly probable. So we had taken here the example of Raju or Ram. Yes or no, he is an ACCA member affiliate, शादी होगा उसका, ऐसे बहुत कुछ एग्जाम्पल लिया to remember. But what did I mention? The asset must be available for immediate sale. When will you say the asset is available for immediate sale? In the class also I mentioned an example that I have a machine. I have taken an order of a customer. I have to complete that order. So will I call the machine as held for sale today or once I complete the order? Once I complete the order. After that day only it will be classified as held for sale. Chalo then, let us read the question. On 1st November 2000 XYZ held a property with a carrying amount of 10 million. Okay, what is the carrying amount of the property on 1st November? 10 million. Measured using the cost model. It is under the cost model. Okay, no issues in that. The factory had a remaining useful life of 10 years. Remaining life is 10 years, so it can help us for depreciation calculation. J intended to sell the factory as soon as major customer order was completed. Now see, same thing. In the class also we have done two questions regarding the same MCQ. Here they are saying that J company intended to sell the factory as soon as the major customer order was completed. So once the order is completed, the asset will be classified as held for sale after that day only. This was expected to take at least a year. Arre baap re baap. Problem hai. It will take at least 1 year. GS started marketing the property for sale on 1st August 2006. Okay, they are starting the marketing today only at a price of 14 million. Okay, which was the property fair value? Okay, it's equal to the fair value. There is no such issue in the pricing of the asset. But what is the important condition? We have to see asset is available for sale today or not. Then cost to sell is also 0.5. Yes, sir. So this PP is following which model? IAS 16. It was a factory. Factory means IAS 16. It's under cost model. So let me highlight this also. Yes. At J year end 31st December 2000 X6. Okay. Year end क्या है? Year end is what, sir? 1st November 2000 X5 and 31st October 2006 year end. The customer order was still incomplete. The customer order was not completed here. If the customer order was not completed, can we classify this as held for sale? Nahi, Baba, nahi. We can't. But it was expected that this would be completed at the end of November. Okay, they're saying it will take 1 month. Okay, no issues. 1 month. Now you only say to classify as an asset held for sale, asset should be available for immediate sale. The sale should be highly probable. Both should be met on what? Reporting date. One is after the reporting date, one is here. No. IS10. One is here, one is here. Both the things or both the conditions should be satisfied here. So one condition is not satisfied. If it is not satisfied, can you classify this as held for sale? We can't classify this as held for sale. Sir, if we can't classify this as held for sale, क्या करेंगे इसका? What we will do? Simple. Whatever is the accounting treatment in IAS 16, follow that. See now, the fair value of the factory on that date was 14.4 million and the cost to sell remained at 0.5. Now say asset is not classified as held for sale. Then we will follow what? Follow IAS 16 normal accounting. Sir, IAS 16 which model? Revaluation of fair. Revaluation model cost, sir. Cost model, sir. Sir, it is very simple, sir. Cost, here we know the carrying amount is 10 million. Remaining life was 10 years. Sir, what is the depreciation for this? 1 million is the depreciation in P&L. Which category? Operating category. Sir, इधर कितना हो जाएगा carrying amount? Carrying amount will be 10 minus 1, that is 9 million. What is the correct carrying amount of the factory in J's statement of financial position as at for 31st October 2006? So what is that, sir? 9 million. A is the option. A is the right answer here. Many students have done what? No, many students here, they have properly identified here. Even though identifying they what? They have followed fair value for this. In the question, it is clearly written cost model. Do not assume yourself कि sir revaluation होगा ये होगा वो नहीं. What is written in the question, follow that. Chalo then. Till now we have done 9 questions. Out of 9, I know that one revenue ka question was little bit tricky. But if you apply little bit common sense, ki sir sale with right to return, we will not recognize revenue. First two entries are wrong only. A, B eliminated. Then C and D will only, you have to choose the option from that. But chalo then. This question is also done. Revise very important. I mentioned IAS 36, IFRS 5, very important for your exam. Chalo then, let us jump to the next question. The next question is regarding your sale and leaseback and IFRS 15. Okay, sir. So this also you mentioned in the class, sir, that it is an important question, favorite question of the examiner. So sale and leaseback. What did we learn in sale and leaseback? Sir, if control is transferred as per IFRS 15, performance obligation is satisfied, then we will do sale and leaseback. Sir, if IFRS 15 conditions are not satisfied, then what do we do? Sir, if IFRS 15 conditions are not satisfied, we do one thing. Sir, we record the amount which we receive as a liability. If the definition, if the control criteria as per IFRS 15 is not satisfied, the full amount we recognize what? As per financial liability, debit bank, credit financial liability, and the asset we record in a book and we do the normal accounting. But let us see here. The case is what? On 1st June 2008, E owned a building with a carrying amount of 21.6 million. Okay, on 1st June 2008, E owned a building with a carrying amount of 21.6 million. The value is how much? 21.6 million. Carrying amount is given, sir. Date, be good with the dates, huh? See the dates properly. 21.6 million. On this day, E sold the building to a finance company, like a bank. They are selling them for 36 million. Okay. Its fair value. Its fair value. Okay, the selling price and fair value are equal. As I mentioned in FR, selling price and fair value will always be equal. The remaining cases that you will study in your SB are not here. Then, and its fair value. and immediately entered into an agreement to lease it back for 80 years. Okay, they are selling this and they are immediately entering into lease. So this question can be regarding sale and lease back, but we have to see what? We have to see the other parts, whether the control IFRS 15 criteria is satisfied or not. The remaining useful life of the building on 1st June was 25 years. Okay, 25 years, they are saying it. The sale and leaseback agreement require payment of 2 million payable annually in arrears. Okay, the payable annually in arrears. At 1st June 2008, the present value of the lease payment is 30 million. Yes, sir. 30 million is the value of the soul. The transaction is what, sir? See here. क्या लिखा हुआ है? The transaction constitutes a sale in accordance with IFRS 5, IFRS 15. So it's a sales transaction. Then, if it is sales transaction, it's a sale and leaseback. Then let us read the question. So, what gain on disposal should E recognize in the profit or loss in relation to the sale and leaseback of the building for the year ended 31st May 2009 to one decimal? To one decimal, you have to say the answer. And the answer should be in revenue, not in millions. Sorry, in your class, in our regular classes, if you remember, I have taught you two methods to calculate the gain. One is the journal entry method and the other one is step 1, step 2, step 3. If you calculate using method 1, method 2, your answer will be same. Chalo, now what will I do? If IFRS 15 criteria is being satisfied, I will de-recognize the asset. One simple thing, I will de-recognize it. Yes, sir. So now when I de-recognize, what is the journal entry I pass? Debit, credit, sir. I will do with the both the methods, huh? I de-recognize the asset. Chalo then. If I de-recognize the asset on that day, first June, what was the carrying amount? 2.6. Sir, asset is going out. What is the 21.6 million? 21.6 million. Yes, sir. Then what will come in? ROU will come in. Bank is coming in. What is the bank amount that is coming in? 36 million, sir. And we will recognize the gain on what? We will recognize the gain on the right that has been disposed, the right that has been transferred, not right retained. So, excuse me, credit lease liability. What is the lease liability beta? 30 million, sir. So what is the right to use asset formula? If you remember, ROU formula was what? Carrying amount into present value of lease liability divided by what? Fair value. Fair value divided by fair value. So carrying amount is 21.6, as we have seen, into present value 30, fair value was 36. If you do this, what is the value? 21.6 into 30 divided by 36, it is 18. So ROU is coming to 18. So the difference is on which side? 36, 18, 54 this side, 21.6 minus 30. It's 2.4. It's coming on this side. Credit side, P&L gain. A gain of 2.4 is done. Do it, you will get the answer 2.4. A very simple and a easy question. In the class also we have done 3 to 4 basic questions and then 2 to 3 MCQs also. In your test series also you had an MCQ regarding this one. Only the numbers are different. So what is the other way, sir? Can you teach the other way? Yes, the other way was what? Total gain. What is the total gain, everyone? So the total gain was what? 21 minus 36 minus 21.6. 36 minus 21, it is 14.4. Can I say this is total gain? This is total gain. Then step 2 was what? Gain relating to right retained. Right retained. That is 14.4 into, sir, 30 divided by 36. The same value. We have to use it. You're getting 12. So can I say what is the gain on disposal? Gain that relates to disposal is total gain minus gain relating to right retained. That is 14.4 minus 12, sir. If you do this, you get 2.4. Whether you use this method or the journal entry method, your answer will be same. So with this, a very easy question regarding sale and leaseback. See, whenever the examiner want to test this IFRS 16 sale and leaseback, they will give the gain on loss. They will not say that IFRS 15 was not. In MCQ, They can give theory MCQs. So with this, the 10th question is also done. A very easy, simple question. Chalo then. See everyone. Take time. So with this, I hope this part is done. Chalo then. Let us start with the next question. Warranty provision. Warranty provisions are provision IS 37, IFRS 15, revenue, standard warranty. See, let me show the notes also. In the class, we have written IFRS 15 warranties. Yeah, there are two types of warranty: assurance warranty, standard warranty. We apply IS 37, we have to recognize a provision. Sir, if it's a service warranty, it's an additional warranty. We follow what? Sir, it's a separate performance obligation. So now, chalo. So see here now. F has sold washing machines with 1 year standard warranty. Standard warranty means which standard? IAS 37, sir. As part of its contract for a sale for 6 years. Okay. 6 year sale. In the year ended 31st December 2000 expired, it sold 1,25,000 machines. 125,000 machines. They are selling 125,000 machines. Year end 31st December 2000 XY. In the year ended 31st December 2006, it sold $135,000, 135,000 machines. So 125,000 machines and 135,000. On average, 8% of the machines sold in a year need to be repaired under warranty. Okay. They're saying what is the percentage here? They're saying out of this, 8% machine should be repaired. Now you only say whenever there is a repair, we have a cost also attached to it. Yes, sir. Let us see what is the cost. Not all the machines are better, only 8%. Remember it. At each at each reporting date, the repair department estimates the average cost per repair in the coming year. Yes. At 31st December 2000 XY, the future repair cost was 50. Okay, future repair cost is how much, sir? 50 for which year end? 31st December 2000 XY. For 31st December 2000 X6, it is 58 due to an increased cost of parts. That 58, why that increase is that of 58? Because there is an increase in what? Cost due to something. Then Then which statement reflects the correct accounting treatment in F financial statement for the year ended 31st December 2006? So you're asking what is the correct accounting treatment. Now you only say better. The machines which we are selling is for 6 years. Now see here everyone, how many machines are damaged in 2000 XY? See, so 125,000 into its 1 year provision into 8 percentage, sir, into what is the cost? 50, sir. How much is this? Okay, the provision amount here was 50,000. But second year, at the end of the next year, the provision will change, yes or no? So 135,000 into 8 percentage into 58. How much is this? 6,26,400. Okay, sir. The provision. This is the provision at 31st 12 2000 x5. Sir, this is at 31st 12 2000 x. Now you only say better. What is the increase in the provision? When you prepare your T account, your ledger account, provision credit side, opening balance was 5, closing is 626,400. So during the year, how much we will recognize in P&L? 126,400. Because they mentioned these two things that at this date the number of units are this much. So we apply and calculate the value. So this is the, let us read now. Now, can I say they are selling in 1 year? So can I say it's a legal obligation or not? It's a legal obligation because it's mentioned in a contract, sir. It's not a constructive obligation. Yes, sir. Which of the F has a constructive obligation and should make a provision of this? Will you make a provision of this for the current year? They are asking for the year ended. Read the question for the year ended. Will they calculate as this? It's not a constructive. Even though we say, sir, it's 624, but it's not a constructive. The answer should be wrong. You should eliminate the sentence. For the year they are asking, not as that year. F has a legal obligation. Yes, sir. F has a legal obligation. But should the provision amount be 540? Nine. It should not be 540. It's wrong, sir. F has a constructive obligation and should recognize an expense in relation to this of 40,000. No, it's not a constructive obligation. See, the answer is within the question only. Constructive, you eliminate better. Then see what is the obligation amount, this or this one. For sure, 540 is not the obligation amount for the current year. See, 540 is not an obligation for the current year. Be little bit smart in the exam. So this is also wrong. Then F has a legal obligation and should recognize an expense in relation to provision for warranties for 1,26,400 in what the statement of profit and loss P&L. See, if you remember in the class we've done 3 to 4 questions regarding this topic. If you remember, in provisions we had done 4 to 6 questions. If you remember, basic question, same question. But what are the point that there we were calculating for balance sheet, here we are calculating for P&L, the difference, opening and closing value. Yes, sir. I hope this question, yeah, this question also many students mentions ki sir thoda bahut tricky tha, but many students made a mistake by taking this option A as the answer. Arey baap re baap, yeah, you say this, but is it a constructive obligation? Think. No, it will not be enough. Read the other options, you'll automatically get your answer. Avoid silly mistakes in the exam. Yes, sir. So with this question is also done. Now 11th one. Then coming to the 12th question, sir. The 12th question is regarding revenue recognition significant financing component. Remember. So significant financing component, sir. If today I am selling the goods, but the customer is paying after 2 years, whatever is the payment after 2 years, I will discount it and record it today. Yes, sir. Revenue I will recognize when the goods are transferred. Today only I have transferred the goods, I recognize revenue today only. Sir, what is the price? At what price we will recognize the revenue? Revenues, the amount, the price of revenue. The revenue will be recorded at the amount today only when we transfer it at market price. So in future, today my market price of the goods is $10,000. Will I charge after 2 years also 10,000? Hey Baba, I'll charge 12,000 to 14,000 because that is my opportunity cost, interest I'm charging. Yes, sir. Sir, if customer has given the goods today, customer has given the payment today to us, and future he is collecting the goods. It's like a loan. We have taken advance amount, and over the period there will be finance cost, and then I'll recognize revenue in future. Simple. So let us see which case is this. On 1st September 2004, M sold an item of heavy plant to a customer for $460,000. Okay, what is the date? 1st September. Let me write down. Dates are very important. Be careful with the year ending, starting date, closing date. They have sold this for 460,000. Now, what is the amount they have received? Let us see. The plant was delivered on the same day. Arre baap re baap. Same day delivery means what, sir? Controller stands what? Controller stands what? The customer paid a deposit of 50,000 on delivery. Today the customer is paying how much, bete? Today the customer is paying 50,000. Today only is paying. If he is paying today, will you discount this? Assume yourself that you are going to a shop, you are purchasing an item, you are paying 50,000 today, and you say remaining I'll pay in future. What will the party do? He will discount and record the remaining value. See, no. And M provided the customer with 2 years interest free credit on the balance of the cost. So the balance is how much? Balance is 460 minus 50,000, that is 410,000 beta. Yes, sir. What is the revenue they should recognize today? Okay, for this current year they are saying what is the revenue. Can I say revenue to will be recognized today only? No, revenue is recognized in the current year. In current year, why in current year? Because control is transferred. But sir, what should we do? We should discount and record it. That 4 lakh 10,000 we should discount it and record it for 2 years. So the 6% it's the rate. It is interest free credit. Understand that parties will never give anything for free. We have learned in revenue nothing comes for free. Some or the other element will be there in that. So 4 lakh 10,000 I will discount it for 2 years. So that is 1 divided by 1.0612. So into 0.890, I'm rounding it off. Rounding off to the nearest decimal so that it becomes easy. 3,69,000 is the value. 3,64,900. Sir, in future, see here everyone, 4,10,000 is the balance which we will get in future. So what I have done, this amount I have discounted here. I've discounted here today. That is 2 years I have discounted it. I got this amount plus 50,000 today. That is my total revenue. So total revenue. So what is the revenue I'll recognize? 4,14,900. So what is the journal entry we pass? See, debit, credit. Sir, debit revenue 4,14,900. So bank account, debit what comes in bank account 50,000 coming in, and the remaining will be what, better? The remaining will be your receivable, that is 6,364,900. For this, what will I do in future years? For this, in future years, what we will do? We will unwind it, and when I unwind it here, it will be an interest expense or interest income. It will be an interest income because it is a receivable. And where we will recognize this interest income? This income will be recognized in operating category. So let us see what is the answer for revenue. I got 4,14,900. 4,14,900. Okay, it's nearest. So this one, because as I mentioned, I've done rounding off. So this is the answer. A very easy and a simple question. If you we have done in our regular classes, we have done three questions regarding the significant financing cost. If you remember, we had taken the example of Havels, TV seller, etc. Same hand. Today you pay some amount, remaining is paid in future, that you discount and record revenue. So 12th one is also done. Yes, sir. Then coming to the next question. Government grant, government grant, government grant. Sir, a very easy government grant. Yes or no? Yes, sir. Government grant, easy. See now everyone. Government grant. When should we recognize government grant? Sir, when there is reasonable assurance. Sir, what is the basic journal entry which we pass in government grant? If you remember, debit credit, receivable of bank, and credit what? Deferred income. This is the priority that is given, not reduction in the cost of the asset. There are two methods, Baba. Either we reduce from the cost of the asset or either we recognize deferred income. So, but before that, we have to see whether it's a capital grant or revenue grant. Chalo, let us read the question. On 1st July 2008, F company received 90,000 grant from a local government. Okay, sir, we know, sir, local government only will pay. It's not that American government will pay us, etc. XYZ. No. Local government will pay us for the welfare of the society or purchasing an asset to do business, etc. To support its expansion. Okay, for expansion purpose. The grant was used to acquire a tractor. It is given for acquiring a tractor costing 240,000. So it is what, sir? It's a capital grant. It's a capital grant. Yes, sir. So on what date? On what date we have received the grant? On 1st July. Yes, sir. So on the 1st July, what is the journal entry I pass? There are two methods, but the priority I will give to this method, deferred income method. So that is what, sir, on 1st July, 1st July 2008, sir, we received $90,000. Yes, sir. Now remember in the class I mentioned, do we see the date when we receive the fund? Do we see the date when we receive the grant? Not. We consider the matching principle. Excuse me. Then, sir, the grant, okay, we have purchased an asset costing how much, beta? 240,000. I have purchased the asset. What is the cost? Debit asset, credit bank. How much is this? 240,000. Yes, sir, we have purchased the asset. Then, useful life is what, sir? 10 years. Now, say me, the tractor has this. Okay, sir. Chalo then, everyone. What should we do here? See here now. Sir, we are following deferred income. This is the most preferred method, etc. Sir, how we will get to know what should we do in the question? Let us read. Which statement correctly reflects accounting treatment permitted by IS 20, government grant and disclosure for government assistance? Grant income of 90,000. Will you recognize grant income full today? You only say me better. Will you recognize the grant income into P&L today? No. There are two methods. One is reduction from the cost of the asset and one is as a deferred income. Sir, when we will recognize the full amount into P&L? when it is unconditional grant. Here the grant is given for what? A purchase of tractor, and that tractor we have to use for 10 years. So we should take it to PNL. We have to defer it. We have to every year we have to recognize into PNL as an income for 10 years. So this is wrong. ये तो नहीं लगता है. Grant income of 4,500 is recognized. Okay, let us see. Okay, 4,500 is recognized out of 90,000 means deferred income, because we are not recognizing the full amount. No, in part we are recognizing, so it becomes a deferred income. The grant is present as a liability with a carrying amount of 86 at this date. Okay, liability which method? Deferred income. We have to confirm whether out of these four sentences which is right. First one was out of the box, sir. It is wrong only, sir. Then the tractor is represented as a PP with a carrying amount of 144,500 at 31st December 2008. Okay, this I think it can be reduction in the value of the asset. Let us check now. They have not specified. Let us check here from the reduction of the value of the asset. If I do the reduction method, my PP was how much? 240 and 90,000. How much will this be? If I reduce this today only, 1,50,000. And this I will depreciate for 10 years. If I depreciate for 10 years, 15,000 is the depreciation. Yes, sir. 15,000 is the depreciation. Into how many months depreciation? August, September, October, November, December, 5 months. Into 5 divided by 12. Okay, into 5 divided by 12 is 6,250. Okay, so this minus 6,250. How much is this? 143,750 I'm getting. 15,000 into 5 divided by 12 minus 150. 6250. We are getting 143, but your answer was 144. So this is also wrong. So that means reduction from the carrying amount of the asset, the government grant, when we reduce from the carrying amount of the asset, that is wrong. That is not. Then the other method. Let us try with the other method, sir. Reduction method. This is wrong, better. Ye wrong hai. Then, sir, deferred income. Now, see, deferred income. If it is deferred income, what will happen? Sir, deferred income means we have to take to P&L. Now, what is the useful life of this? Whenever we take grant into P&L, we take it over what? Sir, we take it as per the depreciation ratio. Sir, your depreciation is for 10 years. Sir, this also will be for 10 years. That is 9,000 per year. Per year, 9,000. Yes, sir. But for how many months? See now, everyone. Sir, depreciation is starting from 1st August. 1st August, and I said the amount which we have brought is from 1st July. Now say me, we have received the grant early. 1 month before only we have got the grant. But we recognize this grant into PNL as for matching principle in the depreciation ratio. So the depreciation is only taken for how many months? 5 months. August, September, October, November, December. So grant income also should be for 5 years, no? Yes, sir, matching principle for 5 years. So I say this into 5 divided by 12. How much is this? So I will take into P&L how much? 3,750 into P&L. Which category? Operating under which? Other operating income. Other operating income. So what will be the balance in deferred income? 90,000 minus 3,750. Yes, sir. 86,750 here. Here the reduction method was wrong. We did not get the right answer. So now let us see. 4,500. Will you take 4,500? Will you take 6 months? No. We will all. Many students have done this mistake. They have taken B. Arre baap re baap. In the class, I mentioned you matching principle. So match it according. Then sir, then C is the right option. 8,750. Yes, sir. 8,750. Your option is what? C is the right option here. C is the okay. It is 9,000 minus 3,750. Okay, 250. Sorry, my bad. It is 250. That is your right option. Yes, sir. So with this question also was easy. What is the silly mistake that students have done here? They have selected B. I mentioned in the class, in the depreciation radio, whatever is the depreciation for the current year. So 5 months, only 5 months we will take it. If we do reduction value method, it is coming wrong. This is also wrong. From B and C, you have to select. Many students have taken what, 90,000 divided by 10, divided by 2, sir. 4,500. A very silly mistake it is. In the class also, I mentioned in our regular classes, avoid this silly mistake. I hope this is clear to everyone. So till now, the questions where you would have done mistake is the first one for revenue, that, and the government grant. This one and your this one, what we say, provision. Out of 13 questions, 3 questions you mentioned, sir, we had a problem, etc. No, but the question was in the answer was in the question only. If you have read it properly. Chalo then. The coming to the 14th question, last two questions, 14th question. Research and development intangible asset question. Let us read. In the year ended 31st October 2000 X8, M incurred the following expenditure. M has incurred the following expenditure. $330,000 to buy a soft drink formula on 1st January 2000 X8. The rights were determined to have an indefinite useful life. So today I purchased a soft drink like Coca-Cola. From Coca-Cola, I purchased the formula. How do they make? So it's an intangible asset, sir. We have purchased it. It's not an internally generated. No. If it is internally generated, we will not recognize only. But here we have purchased. Yes. Sir. So then, sir, this is an intangible asset. $12,000 to register its legal right to the formula on the day when it was acquired. Now, can I say it's directly attributable or not? Sir, it is directly attributable to this one. So we should include this also in cost. Let us see. What amount should M report as an intangible asset at 31st October 2000 X1 in respect of this expenditure? What is the amount we have to include in intangible asset? So it's a question regarding capitalization of intangible asset, a very simple and easy question. So 45,000 to build up a brand, 45,000 to build up a list of customers. Customer list, it is, did you purchase this customer list or it is within the company? It is within the company, baba. If it is within the company, do we capitalize internally generated brand? No. This was completed on 1st August, 1st March, and expected to have a useful life 5 years. We will not capitalize. Internally generated brands are ignored. So we have made a customer list. For that we have incurred 45,000, and preferences is also there, etc. But these customer lists, do you know the actual value? No. Today you have created, but there are other costs also which have been involved in the creating of this list of customer. It's not that from day one you will have very good customers. It is difficult, impossible. It's wrong. It will not. It will go to P&L. Which category? Operating categories. 150,000 to acquire technology on 1st July. Okay. Year end is what? 31st October, sir. We have purchased this on 1st July. It was expected to be used by M for 10 years. Okay, from today only we are using it. So if we are using it from today, I purchased here 150,000. So how many years is amortized? 10 years. So 15,000. How many months? 7, 8, 9, 10. 4 months. 5,000. Sir, 5,000. So 1,50,000. Amortization is 5,000. So it became 145,000. Yes, sir. This we will take to intangible as yes. We will take 330. Yes, sir. We will take 330 also. Will we take 12,000? Yes, we will take 12,000. We will take 145 also. We will not take what? We will not take the value of your 45,000. Customer list, we will not take it. It is an internally generated brand. So it will not be recognized. A simple. So what is the value now? $330,000. 12,000, $145,000, $487,000. So the answer is $487,000. No options were there. You have to type it out. You have to write the figure in the box. It's done. So with this, the 14th question also was easy, but you had to be careful here. Many students have done what? No, they have taken this 45,000. Even though the amount is given, if you remember in the class also we had done an MCQ where the amount was given, but still we did not capitalize. Same MCQ. It's yes, sir. So with this is also done. 14th question, a very easy and a simple question. Then coming to the last question of section, this one, inventory change in cost formula. Okay. The question is regarding which one? The question is regarding which one? There is a change in. What is the change? Change kya hai idhar? There is a change in the cost formula from FIFO to weighted average cost to FIFO, etc. This is the question which we have done in the class. See, I is 8. If you remember, I mentioned you. This was the example which I had given you. This was the example which you had seen, and this was the question which we had done in the class. Sir, opening inventory will be affected, closing, closing will be affected. Now let me explain you the same thing here. So see, now let us first read the question, then come to it. And I had given, when we did IES to inventory also, I had given shortcuts to remember. If closing inventory is increasing, what will happen to profit? What will happen to cost of sales? Again, I will explain. So remember it. Excuse me. On 31st December 2008, its year end, S decided to change the assumption used to measure its cost of inventory from weighted average cost to FIFO. They are shifting. So whenever they shift from weighted average to FIFO, FIFO to weighted average, it's a change in accounting policy. So for accounting policy, what is we follow retrospective impact, not prospective. The measurement of inventory using both the methods are follows. Okay, x8 they have given both the values, x7, x6 also both the values they have given you. No issues in that. Yes, sir. Then let us read which statement is correct in relation to the financial statements for the year ended 31st December 2008. Okay, they are saying which is the right statement as per when we have shifted from weighted average cost to this one. We have shifted from what? Weighted average cost to FIFO, sir. So when we shift from weighted average to FIFO, can I say what will I do? Retrospective impact. Retrospective means third balance sheet concept comes into picture. So the earliest period presented, we change the value. Retrospective impact. Then, sir, for the previous year, the comparative years, we restate the value. So instead of showing this as the value, we have to restate at this value. Let us see that. We have to restate the value. It is important that earliest period presented retrospective impact will be done. After that, we restate the value. Yes, sir. Let us read the points here. Then the cost of sales in comparative. Yeah, for this I mentioned you have to know that which is increasing. I'll come to that. Let us first try to eliminate if we can eliminate any sentences. This is a change in accounting estimate and no prior period adjustment is required. Can I say wrong? It's out of the box. You only say me. It is out of the box or not? It is out of the box, yes, sir. See, without doing the calculation, I can do the answer here by just eliminating the sentences. Inventory in the comparative statement of financial position is measured at 50,400. Comparative means what? The current year is 2008, comparative is 2007. Sir, in 2007, it was recorded at 50,400. But we should record it at what? Recorded at what? 52,100. We have to restate it. Have they done here? Inventory in comparative figures is measured. This is also wrong. We have to restate, Baba. We have to restate the values. Earliest period will be corrected. After that, the comparative figures we have to restate. This is out of the box. So, prior period adjustment of 2,500 is disclosed. Is this a prior period adjustment? Is this a prior period error? It's not a prior period error. So, this is also out of the box. Then for sure answer will be what? For sure answer will be A only. Without knowing the retrospective increase, decreasing, how much I have done the answer. I've just eliminated the sentences. Chalo, still, by the way, you have confusion in these 2 points, yes or no, sir? There would be a confusion in these 2 points. Now let us understand. This is not, it should be out of the box. This is not a prior period. It's not a prior period error, etc. XYZ. Uh. Chalo then. Let us do now. Let us see now what is the first sentencing. Let me compare with the first sentence. The cost of sales in the comparative statement of profit and loss for the year ended 31st December is restated and increased by 900. Okay, they are saying for 2007. I mentioned The earliest period presented is 2000x6. So in 2000x7, what should we do, bete? We have to restate the figures. Sir, when we restate the cost of the asset, we have to consider. Now see everyone. Now closing inventory. Whenever your closing inventory is increasing, what will happen to profit? Your profit also will increase. If my closing inventory is increasing, what will happen to my cost of sales? What will happen to my cost of sales? If closing inventory is increasing, my cost of sales will come down. And sir, profit will increase. Sir, profit will increase. Sir, if closing inventory is coming down, cost of sales will go up, profit will come down. Yes, sir. This is for closing inventory. So for opening inventory, what will happen? If my opening inventory is more, can I say my cost of sales also will be what? More, sir. My cost of sales also will be more, but my profit will come down. So opening inventory is coming down. Cost of sales also will come down. Profit will increase. Yes, sir. Now let us see here. What is the? We have to see for 2000x7. Now when we see for 2000x7, what is the data we consider here? What is the data we consider here? For 2000x7, not for 2000x8. So, sir, this is closing value. This is opening value. Opening, closing. See, we are standing at 31st December 2000x7. For x7, this is closing. So, automatically for 1st January, previous year values will be taken. So, see here now 50,400, 52,500, 52,100, and then we have 55,100. Yes, sir. This is weighted average cost. This is FIFO. It's the new method. Huh? New method. This is the old one. We are shifting from this to this. So it is for X7 beta. Now you only say this is X6 data. This is X7 data. 31st 12. 31st 12. So can I say for 2000 X7 this will become what? Opening inventory. This will become closing inventory. Sir, this will become what, sir? Closing inventory. This will become opening inventory. Yes, sir. So the question was regarding cost of sales. We have to see what are the adjustments for the cost of sales. Now see here, everyone. I say my opening inventory is increasing by how much? My opening inventory is increasing by how much? My opening inventory is increasing by 55,100 minus 52,500. It is 2,600. So my opening inventory is increasing. Whenever my opening inventory increases, my cost of sales also will increase by this value. Yes, sir. So what is happening to closing inventory? Cumulative difference we have to take. So my closing inventory is increasing by what amount? So 52,100 minus 50,400. So my closing inventory is increasing by this much. If my closing inventory will increase, what will happen to my cost of sales? My cost of sales will come down. Cost of sales will come down. So on one side, my cost of sales is increasing by 2,600. On the other side, my cost of sales is coming down by this amount. So net increase is how much? The net increase in cost of sales is what, beta? 900. It's 900. So the sentence 1 is right here. Cost of sales in comparative statement profit and loss 31st December is restated and increased by 900. We have increased it by 900. A very important. You have MCQs. We have done MCQs in the class. If you remember, retain earnings adjustment, increase in cost of sales. Same question. Chalo, chalo, have a look on this. Chalo, a very good question. Many students have avoided this question. They have not done only. They mention कि sir tricky है, tough है, ये है, वो है. No, 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 no. We have already done in the class. The logic was what? See, out of the two sentences, I've eliminated. And it's not a prior period adjustment of 2,500. They are saying to statement of changes in equity. This, what they're saying, 2500, how did they get? Yeah, this one. 4500 minus 54,000 minus 56,500. 2,500. Now you only say, will you only do the adjustment in equity or will you do the adjustment in retained earnings also? We will do the adjustment in retained earnings also, no? We do adjustment in retained earnings, we have done here. But we did not do the adjustment to what? Inventory here. We have to do that also. I hope this is clear to everyone. So let me explain once again here what is happening. So these two are out of the box. Here, let us check for the cost of sales. So this is the data for 2000 excellent closing. This is opening. My opening inventory is increasing by 2600, sir. So whenever my opening inventory increases by 2600, my opening inventory increases, my cost of sales also will increase. My cost of sales also will increase here. What is the value of the cost of sales? See, sir, 2600. Yes, sir, 2600. Sir, my closing inventory is increasing by my cost of sales will come down. So my net increases 900. Yes. So that is the reason. Now see here, a prior period adjustment. Can I say in prior period you only check? Here the difference is 2500. Here difference is how much? Here the difference is how much? अरे यार, 1700. Here 2600. Now you only say prior period adjustment of 2500 is required. Here prior period adjustment of 2600 is required, not 2500. This is wrong or not? It's wrong. Then in the current year adjustment is required what? This is current year. This is not prior year. Huh? Do not confuse with that. He's saying sir 2500 we have, no. We can adjust it. No, but it is what? Yes, 2500 yeah. But it is for current year. They are asking prior period. Prior period means before the current year. So prior period adjustment was 2600, not 2500. This is also wrong on the other way. We do the adjustment, but what is the amount? The amount is wrong. We change the inventory also. Prior period adjustment should be 2600, not 2500. 2500 is for the current year. 2500 is for the current year. So with this, your questions are done. So 15 questions were there in your section A. Out of this, 4 questions were tricky, but the other questions, out of 4, let us take 5 were tricky, but 10 questions was simple, easy, straightforward. And I mentioned you in the class also that in your exam, out of 15 questions, 8 to 9 questions will be damn easy. Here also 8 to 9 questions were damn easy, straightforward. And then 3 to 4 questions also would be easy only, but you will do silly mistakes. So avoid that in the exams. So with this, I hope if you have any doubts, you can connect with me. So a section A we have done. So in the upcoming videos, we'll be doing section B also, and I will upload it. So with this, I hope you like this debrief of the section A. So bye bye. Have a good day. Signing off. Radhe Radhe to everyone, and all the best for your December exam. Please do share with your friends also if they are preparing for FR. And we are coming up with a revision batch, revision marathon this week from tomorrow. Revision marathon at 6 to 9. You can attend where we will be revising each IS and IFRS in detail. And I'll be mentioning the class what are the mistakes you have to avoid. Okay, chalo, bye bye. Have a good day. Signing off. Radhe Radhe to everyone once again.